Let's welcome our final guest of the hour, Mel Lagomasino. She is the CEO of We Family Offices, which has $14 billion in assets under management. She also serves on the boards of Disney and Coca-Cola, two of the biggest consumer-facing companies in the world. And Mel, every day we've been talking about the challenges that these consumer companies have been facing for the last 2.5 years or so, trying to figure out what the consumer wants to do. Is it travel? Is it stay home? Is it buy a lot more? Is it go to restaurants? Is it, shop more from the grocery store? You've had a front row seat through all of this, and I just wonder how quickly these changes have been coming and how boards are able to try and react to that. What have you seen?
Well, I think the consumer wants all of the above, all of the things that you mentioned. And I think that the key is to be consumer-centric and really be keyed into what they want and have the flexibility and the agility to change your business model, change your offering, and deliver, what the consumer is looking for. I think one of the places where you really see that is where what happened with streaming media, right? Obviously, during the pandemic, it was hugely successful, but it's not going to go away. It's going to be here to stay. At the same time, people are going back to the movies. So I think it's the question is, how do you really stay in touch with where the consumer is going? And how do you really change your offering to be able to deliver that to the consumer in the way he wants it or she wants it?
Agility and being flexible are two things that have really been stretched, especially with supply chain issues for any company that has to do this on the fly. And there have to be big questions that are being asked in boardrooms about how much do we spend to chase the consumer? Because we want to be there. We don't want to miss any sales. We don't want to miss any revenue opportunities, but we also don't want to spend too much to build out and then have the consumer move on to the next trend. How do you weigh those two issues?
Well, I think that's a key point, Becky. And I think that you have to be very disciplined in terms of what you do. I think that you have to have flexibility. And I think a lot of what we're going to see with supply chains is going to have to do with reliability and flexibility. And it's going to be a major change. And I think over the short term, it's going to increase the costs for companies.
We spoke with Brian Cornell, the CEO of Target, yesterday at the Economic Club of New York, and he talked about how some of these higher prices, like higher energy and freight costs, they don't anticipate, at least at Target, those prices dropping anytime in the next year and a half. They see it going all the way through 2023. Is that kind of how you see things, too?
I do think it's going to take a while for prices to come down and the reinvention of supply chains. And so margins are going to be affected, and we're going to have to be very innovative to try to keep our margins. And I think with most companies, it's a two-way situation. One is that you're going to have to see how much pricing power you have, and at the same time, you're going to have to innovate to try to figure out how to make sure that you keep your margins healthy.
So as an investor, where do you see opportunities in a landscape that has been really littered with disappointments and hardships and higher costs, lower margins? How do you look around? Are there places that you think, okay, now it's a good time to start buying here or there?
Well, I think that the name of the game is going to be about productivity. And I think technology is what drives productivity. So I'm a huge optimist and believer in the U.S. economy and believer in the creativity and competence of the management of great American companies. And I think technology, whether it's cloud, whether it's artificial intelligence, whether it's clean energy, the healthcare space. I mean, when you look, Becky, at the amount of investment that's going on by U.S. technology companies in different innovative solutions to problems, I think that's where it's going to come from. By the way, I think that the private markets are going to be more interesting than the public markets. And so I think for investors, the ability to invest in the private markets with great managers who are really looking at all these technologies that are going to help productivity and fix some of the problems that we have today, I think that's where the major opportunity lies.